Hello everyone, John here. Today I wanted to talk to you about Microvision. I actually found this stock a few days before it went all crazy on Reddit. I found it looking through space exploration ETFs. I found it in the ETF MOON, and it was its top holding. And at the time when I was looking at it, it was trading for $10 a share. And recently it popped off to $17 a share. So I wanted to take a closer look at it this weekend, just to see if the increase in share price was, if it was justified, if I thought the company was worth that much, and what their growth prospects were. So I was going to share with you what I found. Have everything written down on note cards, so forgive me if I'm looking away a bit during this video. But yeah, so Microvision, ticker MVIS, they're involved in laser scanning technology, image capture, 3D sensing. They have a project going on with LiDAR for smart home applications, and autonomous driving. Basically what LiDAR is you shine a laser at a bunch of shit and it'll map out what the laser is shining at and give you a distance estimation to estimate how far away the object is from you. They're also doing miniature projection displays, so you can almost display things on like any surface. I think that would be really useful for like business meetings when you just want to just project your presentation like on the table. We'll have a lunch or something, and it seems like they can do it on pretty small surfaces, which seem to be pretty cool. They're also doing like virtual reality headsets, which is going to be hugely popular for gaming. Also, the whole virtual tours with the virtual reality headsets became pretty popular during the coronavirus lockdown. So I like what the company is doing. I think they're involved in a lot of technology that is emerging and just only going to grow in the future, like the autonomous driving. So I really like that. What they were working on. It looked like they were founded in 1993. I think they IPO'd in like 1996. Their share price was during the dot-com bubble. It looks like it went up to about $60 a share during that time, and then after the bubble burst, it's really just been a downhill slide for them. In 2018, they were basically a penny stock trading for like 80 cents, 70 cents. But to be fair, it looks like they have had share dilution and a few stock splits that would have contributed to the share price coming down so low. But regardless, it looks like they've been having a really hard time just sustaining an upward trend in their share price. If you look at their chart, it's just basically been a downhill slide. The last time they were trading for $17 a share was back in 2010. Their market cap is 1.97 billion. So they're a large cap company. Their revenue is only 3.09 million though, which I thought was pretty low for a tech company. And if you looked at the revenue of back a few years ago in 2019, that revenue is 16 million. So the revenue has really decreased quite significantly over the past 2 years. Yeah, I mean, so that, I don't know, that's not good. I took a look at their PE ratio to see if just based off the PE ratio, if the share price was overvalued, undervalued. For those of you unfamiliar with the PE ratio, just a way to get a quick glance at what if the share price is over or undervalued. What I found was their PE ratio was negative because they're not yet profitable. Their PE ratio was negative 184. The industry average for them in their sector was 27, so they're pretty far off from the industry average. But I found this interesting. Their EPS has been uptrending though. The EPS stands for earning per share, and it's a great way to also get a quick glance to see if a company is profitable or if they're becoming less profitable, more profitable, what the trend is. So they're actually doing pretty good from a year back. Let's see, back in 2019, their EPS was negative 0.30 cents a share. So still negative because they weren't profitable. In March 2020, it was negative 19 cents a share, so it actually rose. And then back in December, it was negative 0.09 cents a share. So if it continues on that trend, pretty soon they're going to be profitable if the trend holds up. And so that would be huge for them because, I mean, if they've been around since 1993 and haven't even been profitable since then, I mean, if they can finally pull a profitable quarter, that would be really big news for the company and generate a lot of interest for them, I think. I also looked to see if they did maybe any share buybacks or anything. That because if when companies buy their shares back, that can also increase their EPS. And I did not find them doing any share buyback. So it seems to be legit. Um, let's see, their debt is 1.6 million, which I thought was pretty small. Although that is about half of their revenue. But I mean, for a long time, they seemed to, they were debtless for a long time, which is pretty impressive for a tech company. Um, Another thing I found interesting was the public owns 84% of the shares, and the institutional investment only owns 15% of the shares. So really, the public eye, I think, can significantly control the stock price, which can be a good thing or a bad thing. So I would say, regardless, it's in for a volatile ride. If you look at it within the past year, it's been extremely volatile. Um, what else? Yeah, so I mean that's pretty much what I found on it. So I guess the question is, would I buy it at this price? Because right now it's about $17 per share. I think like 17.90. But right now, no, I would not buy it at this current price. Because within a year it's gone up 7,154%. It was still a penny stock back in 2020, and it's gone up 62% in the last week. So it's been significant. I mean, so it's had a significant run over the course of a year of the 7,000% gain. And even adding on to that in the last week with an additional 62%. So I mean, I don't like it at the current price that it's trading at, but that doesn't mean you can't make money off of it. If you're looking to use stock options, you can maybe buy a straddle on it. I believe their earnings are coming up on the 29th, I think, but don't quote me on that. So I'd imagine it'd be pretty volatile going into and after their earnings. So I think a straddle could be a good play to capture some of the volatility on that. Maybe buy some calendars on it. If there's a pretty big, if you notice a volatility skew between the front month and the back month. Um, so yeah, I mean, but overall though, I do think that it's a company that's going to grow. I think their technology that they're looking into is extremely relevant. I almost wonder if they were before their time, and that's why they maybe had such a hard time becoming profitable in the past. I mean, because I mean, I don't know, 10 years back, who needed mini projectors? I mean, everyone was just trying to get the idea of a freaking laptop down. 3D imaging and whatnot and virtual reality headsets. I mean, that just wasn't a popular sell back in the days, but I mean, it's becoming extremely relevant now. And as I said, I think those industries are only going to grow. So if the price comes down again, I would probably buy it on the dip, but I would expect a lot of volatility on the way and hope and pray that they have that they finally have a profitable quarter. So those are my thoughts on it. If you guys have any other thoughts, feel free to share them in the comments. I would love to hear what you guys think about it as well. And so that's my review on Microvision. And yeah, I think I'll leave it there. All right, guys. Looking forward to the trading week, and we'll see you soon.